What's up guys, welcome to Oz Wealth. This is my second video ever on YouTube. We talk about fun stuff here, stock market, dividend investing, retiring early, real estate investing, and business related subjects. Today was a quiet day. Today was a little slide up. All in all was a pretty quiet high. And today probably was the last quiet day before the earnings coming up. Tomorrow, the bulks of the earning will kick off, which is expected to pull the attention away from all the political news dominating the market, the inauguration coming next week, and all the uncertainty the market is going through right now. Hopefully, we'll get back to talk about earnings, fundamentals, growth, and technical analysis, and the fun things that has to do with the market. That starts tomorrow. All the banks are reporting earnings tomorrow. Bank of America, Charles Schwab, Wells Fargo, JP Morgan. And that should pull the attention away from all the drama Washington is going through right now. So I look forward to it. So as you see here, it's a pretty choppy day. We started in the morning going up a little bit, and then it was kind of a little horsey ride, and ending up with almost like flat, pretty quiet day. And you see here it's like a 0.5% up in my portfolio. I'm standing right now at 55,325. Market is closed right now, time I'm recording. The week I'm up 2.3%, almost $1,200. In the months I'm up 9.26%, $4,687. In 3 months I'm up 22%. The year I'm up 36%. Overall I'm up 36.91%. Pretty crazy year last year. Huge earning. I was having my eyes on Realty Income and AT&T all day. I own 100 shares of Realty Income and 200 shares of AT&T. Realty Income dropped below my average cost, which is like $58.10, and Realty Income dropped almost 3% from last week. They had such a tough week as the market is going through uncertainty mode right now. And it was such a sweet number. I mean, Realty Income is a great company, and any number below 60 I think is a good buy. And I was thinking to move some cash from my saving account and buy like 50 to 100 shares. And I finally decided not to do so because I think the number is going to get sweeter in the next coming days, and I think I can drop my average cost substantially. So, and the same thing for AT&T. I think the stock been flat for a while, and it's like a little to the downward side. But again, AT&T is always a good buy. Any number below 30, and probably the highest dividend yield in my portfolio. So I'm going to keep my eyes on those two companies, maybe spike them up to 300 for AT&T and 150 to 200 for Realty Income. So we'll see. Intel today was on fire. The stock went up almost like 9%, as you see here, and we made some substantial gain. The stock went 7% during the day and 1.62 after market closed. And I own 25 shares of Intel, as you see here. We made almost $321 just today. I think Intel is an awesome company, but I'm really hesitant to buy more shares. My average cost on Intel is about $45. I bought the stock when it was $45, and now we have some substantial gain. But I'm kind of hesitant to buy more of Intel. If you look at the stock's growth history since 2001 until today, it was pretty flat, and I think I'm happy with my 25 shares for now. And if the company did some dramatic change to the future marketing and their competition with AMD and Nvidia, I think Intel is going to be more of a shiny stock. But for now, I'm going to stay at my 25 shares. And the only reason I own Intel is because of the dividend. They pay almost 3% dividend yield every year, and they pay quarterly, and it's been consistent. And this is one of the blue chip stocks that I'm gonna own forever. I also want to share with you guys the stocks I purchased early this week. As you see here, I added 3 shares of Aapl on Monday, and it's always good to buy Aapl on a discount. It was $128. and to make the total shares of my Apple stocks 45 shares. And I also added Arkk. It's a new position to my portfolio. I added 3 shares. For those who don't know Arkk, it's a great ETF of 50 companies managed by Cathie Wood. And this ETF covers 50 companies covering 5 sectors. And those sectors are electric vehicles, 5G, genome, biotech, and artificial intelligence. They pay dividends once a year. It's 2 point something. It's not too bad, but I think it's one of the best growth stocks ever. And I'm sold with Arkk, and I think Cathie Wood did such a great job last year, 165% up. I'm gonna start building my position with Arkk slowly this year. Hopefully we can get to 30 or 50 shares of Arkk by the end of 2021. Going back to Simply Safe Dividends and the main dashboard of my entire investing portfolio, as you see here, I'm up 0.5% today, which is almost like $384. Not too bad. We got an increase in the annual dividend. Stag announced a raise in dividends, which increased my income in dividends for almost $1 a month. So I'm going to be receiving $2,089 every year as my portfolio stands right now. The goal is to make this up to 40,000, where I can fund my lifestyle. By then I don't have to work at all. I just sit and collect dividends from all the blue chip stocks that pay monthly or quarterly dividends. So after buying Arkk and Aapl early this week, you can see the information technology went up to be the third among the top sectors I'm investing in, and right now it's 14%. As you see here, consumer discretionary is still the top holding of my investing portfolio, 34%, and it's mainly just Tesla. And as you see here, Tesla went dramatically up last week, and the stock is on fire. So we'll see how the end of the week will pan out. But overall, it was a pretty quiet week. All the stocks are pretty the same. Just a quick disclaimer, guys. I'm not a financial advisor. I'm not pushing you or recommending you to buy any of the stocks I just talked about. You should be checking with your financial advisor before making any move in the stock market. I'm just an average guy here on YouTube documenting his journey on Robinhood app. I'm a long-term investor. I love my stocks. I believe in them. I'm going to own them for a long time. If you're one of those people who are looking for a quick profit in the stock market, maybe this channel is not a good fit for you. I do my own research, I do my own diligence before buying any shares, and I read a lot between the balance sheets and the PE ratios and the dividend yield. And I'm a big believer in the dollar cost average. I'm a big believer in the journey, and the dollar cost average mentality is my strategy for the next 10, 20, 30 years. That's it, guys, for this week. If you have not signed up to Robinhood yet, links are in the description below. You can get a free stock from Robinhood. It's a win-win deal. And if you have not smashed the like button, please do so. You can kick it, hit it, smack it, do something to it. It will mean a lot to me. And if you like the content of this channel in general, please consider subscribing and hit the notification bell. And until next time, you guys, take care.